One of the great things about success is that there is a blueprint. We don't have to reinvent the wheel. We don't have to find this new character type and do something abnormal. If you want to be a once-in-a-generation pioneer, you want to be like Elon Musk and send rockets to space, okay, then you've got to be something extraordinary and something different, and you really got to pioneer. But if you want to be a profitable trader, well, there's a blueprint for that. There's people that have done it that didn't have to reinvent the wheel. Now, the problem is traders put their goal all the way at the end. They say, I want to be a full-time trader and a millionaire. That destination is years and years away. So if you're not getting any dopamine along the way, where is your motivation coming from? Oh, it's coming from your posts, it's from your Instagram, those motivational TikToks. It's not going to help. Motivation is fickle and fleeting, and you will have highs when you watch David Goggins. You'll have highs when you watch certain people online, and then you have your lows the moment you hit 4 losses in a row, and we've all been there. If there's 10,000 hours to achieve your goal, if you're spending 1,000 hours on dropshipping, 1,000 hours at uni, 1,000 hours on e-commerce, 1,000 hours on email marketing, 1,000 hours on SMMA, you haven't achieved mastery in any of them, but you've spent 5,000 hours. I can't have my dopamine based on things that are out of my control. So you can't say when I'm funded, I'll be happy. You can't say when I made $100,000, I'll be happy, because there's too many variables along the way. But if you can feel like a success, if you can feel like you've achieved something with something that's in your control, and you get the same dopamine high, by the way, your brain doesn't know the difference. So hijack that. Hijack it in a sense of, hello, ladies and gentlemen, welcome back to another episode. Well, there's no guest. I thought, you know what, it's been a while we've been doing the show, 9 months or so. We've had on some of the most amazing guests that I could imagine. We've had some phenomenal entrepreneurs. We've had millionaires. We've had 8-figure entrepreneurs, 9-figure entrepreneurs, people worth over $100 million, and even a billionaire. We've achieved a lot on the show so far with some cool guests. And from a trading perspective too, wow, we've had some of the biggest names. We've had so many great traders. We've had traders that have made hundreds of thousands, even millions of dollars from prop firms. Ones that come to mind, Burned made hundreds of thousands of dollars being the number one FTMO trader. We've had Jade Cap Kyle, I think over $1 million in payouts. Andrew and FX, over $1 million in payouts. Some phenomenal names. I'm not going to list them all because I don't want to offend anyone. Umar Ashraf, a guy that's made $20 million verified payouts. We've had, I think, the best of the best, and we're going to continue having great traders on. But I wanted to do an episode as a debrief of myself reflecting on the last year almost with the types of guests we've had and the lessons that I've learned and the types of discussions we've had, because you've noticed that my style of interviewing, my style of being a podcast host is not passive. It's not a case of an interview where question answer with the guest. I don't like that. The reason I started the show was curiosity. I wanted to make a show for myself with the added bonus that you guys can watch. And I knew that the bigger the platform gets, the better caliber of guest I can access, the bigger names I can access, and the more greater minds I can start to pick. And these kind of situations where you end up networking on steroids, meeting the greats of every industry, and I'm definitely going to continue to do so, it's a chance for me to ask what I want to ask. It's a chance for me to discuss my beliefs and challenge the host and challenge the guest with my beliefs and have almost like a debate. So you'll see that we're very back and forth, and certain guests I've been in complete alignment. Other guests, we've been on the opposite end of the spectrum, but we have complete respect because I defend my position, they defend their position. Other guests, they have the opposing position and they couldn't defend it. So that's what part of the show is. You know, you can also see who has clear definitions and understanding on why they believe what they believe, and giving their side of giving their opinion is also powerful. Because then it's also a chance for me to really understand, why do I believe what I believe? Can I take that information from the other person and still hold my belief? Or should I change my belief? And we've talked about a lot of things, from higher time frame versus lower time frame. Is M1 trading real? Fundamental trading versus technical trading. We've talked about the pros of ICT and smart money concepts and the against. We've talked about swing trading, scalping. We've had all these various types of debates with prominent figures who are purists in fundamentals, purists in higher time frame, purists in swing trading, purists in ICT, even ICT chartered members we've had on the show. And it's been an awesome experience, and certain topics I want to touch on today, reflecting upon. First of all is the commonalities I've seen, the common denominators amongst the guests that I've had on the show that I have respect for, that I can see they are legitimate, that they have clear, well-defined opinions, and their beliefs are backed by something. They're not just things they've heard on TikTok and the Instagram reels and they believe it because they've heard it. No, they believe it because they've walked the walk. They've been in the battlefield of the markets and they have their firm beliefs and they can defend it based on their experience and wisdoms. These individuals that I've had on the show that I look up to, and have great respect for. I'm not going to name them, but you guys can figure that out very easily. There's certain common denominators I find, and that's one of the great things about success is that there is a blueprint, and we don't have to reinvent the wheel. We don't have to find this new character type and do something abnormal. If you want to be a once-in-a-generation pioneer, you want to be like Elon Musk and send rockets to space, okay, then you've got to be something extraordinary and something different, and you really got to pioneer, and you really got to innovate. But if you want to be profitable trader, well, there's a blueprint for that. There's people that have done it that didn't have to reinvent the wheel. So I want to speak about the common denominators, and certain ones of them are. It was the idea of how you approach your journey. And that starts from the beginning. And you've heard me say this before, which is longevity in any industry is the most important thing. It's the idea of don't get killed. Okay, don't be in an industry with bad habits and bad approaches that are going to make you give up. Because what is the typical cycle? When you enter anything, whether it's dropshipping, e-commerce, university, trading, whatever it may be, we all follow the same cycle, which is I'm going to do this. Let's talk about trading. I'm going to get into trading because I think it's going to make me money and I think I'm going to get rich. And I see people online and they are rich and they are trading and they're trading from a laptop and they're trading on the beach and they have this great lifestyle. So what do you have? What is your frame? You are hopeful. You think it's easy. They make it look easy. And you feel like you'll be able to find shortcuts through these mentors, whatever. But you come in with a perspective of hope, optimism, and an element of being naive and ignorance. So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow. So what are you? You are considered in a phase called uninformed optimism, where you don't know how hard the journey is going to be, but you're optimistic, you're hopeful, and you think it's going to work out for you. And that's where everyone starts. Because if we knew it was going to be hard and it wasn't going to work for us, we wouldn't have got involved. And you know what it is? As humans, we have certain categories of mindsets where certain individuals will be very optimistic and they'll think this works for everyone. And that's a certain approach people have. Other types of people think this works for everyone, but I don't think it's going to work for me. Other people think this isn't going to work for anyone, but I'm going to change it. And some people think this isn't going to work for anyone. This is all a scam, but let me try it out. So these are all cognitive biases. These are all things that are going to skew our perspective because, as you know, the brain looks to always reinforce its belief. And that's what confirmational biases are. The brain doesn't want to be right. The brain doesn't want to be wrong. Your subconscious doesn't want to be wrong. So therefore, you're always going to look for evidences that are in line with your beliefs, and you will very easily overlook blindingly obvious evidence that goes against your beliefs. And therefore, if you come in with these different perspectives that I've just mentioned, you can see these will be anchors in your journey unless you address them. So if you come into anything with uninformed optimism, you're going to be on a high, you're going to be very aggressive, and that's where you blow accounts, that's where you fail prop firm challenges, and that's where you lose a lot of money and maybe even go from mentor to mentor. Now, what are you going to realize very quickly? This is not as easy as I thought. This is now you are entering the portion of this is possible, but it's going to be harder than I thought, and there's a journey ahead. That is known as informed pessimism. You're not as optimistic anymore. You're not as hopeful like, oh, I'm going to be a millionaire next month. You're like, okay, this is possible, but it's way harder than I thought. It's going to require a lot of work, and it's going to require a lot of information, time, backtesting, journaling, and all of these things you hear all of the guests speak about. And you get a little bit pessimistic because you're like, oh, it's not as easy. It's not as glamorous. It's not a shortcut. It's not a get rich quick scheme. So then you go from a high to a low. And then when you are at that low, you keep pushing through because you're still hopeful. You're just thinking it's not as easy as I thought. So when you keep pushing through, inevitably you'll face problems. And these are problems that I've spoke about with every guest. Every guest has said you either face a lonely period where your circle around you, your friends at high school, they think you're a weirdo. They think, oh, you're trying to be this kind of trader and you're isolating yourself, you're sacrificing, you're not going out and partying, you're not going out to the fun activities that every one of your friends are doing, you're staying at home studying. But you haven't seen any results. So you isolated your friends, you're doing something that's not normal, maybe your parents aren't supporting you, so you feel very lonely. And you don't have any results to show for it. So that's going to encourage you to enter a bit more of a negative mindset. Maybe you go through multiple prop firm accounts and you fail. Negative mindset. Maybe you buy some signal service from a scammer or you buy a bot and you lose some money, now you enter a negative. You will always enter, every single trader has, and if you haven't, you're probably going to, unless you rectify the approach, you will enter a negative period. When you are in that negative period, what does everyone do? They retreat to their comfort zone. This is a subconscious, subliminal thing that happens, but we retreat. We think, okay, this is not working out. We enter the valley of despair. I'm not hopeful. I'm not pessimistic. I'm now just thinking this is not possible. My emotions are low because I've had some losses and I've put in sacrifice, time and effort, and I've seen no results yet because we don't know how to break down the milestones. Remember, dopamine is the hormone, or it's the emotion, but it's a hormone or neurochemical of motivation. People see it as pleasure. And you can go on your phone, you can get some dopamine. You can take drugs, you get dopamine. You can watch TV, you get dopamine. You can masturbate, you get dopamine. Dopamine is not a pleasure-seeking thing. It's a motivation-seeking thing. Meaning to say, we have this in us from a evolutionary perspective of humans are made to reproduce. So therefore, ejaculation, orgasm is a very pleasurable moment. We get the dopamine. Why? Because we are getting that incentive in our mind to do it again, to reproduce again. We eat delicious food that is, high in protein, high in fats, very high in carbs, probably not protein actually, fats and carbs, because we, as humans, we didn't always have access to food. So we got a lot of dopamine from sugary, fatty foods, and that's going to make us want to have that because from a survival perspective, having that kind of food, storing some fat is good for us. So, dopamine is always a positive feedback loop. It's a motivation thing to do that again. Now, because of access to cheap dopamine, we start to do things that are not in our favor. So we use the hormone of motivation for cheap dopamine, and we now end up in negative spirals. But if we can hijack motivation, if we can hijack dopamine for what it should be, which is based on achievement, which is based on rewarding yourself with a pleasurable high on achieving something in line with your goal. Now, the problem is traders put their goal all the way at the end. They say, I want to be a full-time trader and a millionaire. That destination is years and years away. So if you're not getting any dopamine along the way, where is your motivation coming from? Oh, it's coming from your posts. It's from your Instagram, those motivational TikToks. That's not going to help. Motivation is fickle and fleeting. And you will have highs when you watch David Goggins. You'll have highs when you watch certain people online. And then you have your lows the moment you hit 4 losses in a row. And we've all been there. So what are we supposed to do? We are supposed to break down the milestone, because what's the trap that happens? When you have low emotions, no results, no dopamine, and you have outcasted yourself from friends and family. When you're in this situation, what are you going to do? You're going to think, this is all a waste of time. This is not possible. This is not worth it. And then what happens? Next shiny object syndrome. But the sales, online sales. Oh my God, you see this drop shipper. Oh my God, you see this crypto meme coin guy. He's making bank. Jump. And you jump ship. You jump to a new mentor or you jump to a new industry. And if you keep jumping and jumping and jumping, what do? Back to the cycle again. So you are uninformed optimism. Then you go to informed pessimism. Then you go to the valley of despair. And when you're at the valley of despair, most people jump and do the cycle again and again. But if you just stick it out, if you can stay in the industry long enough not to die, is the way I like to look at it, through everything that you've heard the people on the show speak about, building good habits, building good systems, having a correct approach to mentorships, to the process, to psychology, to technicals. If you have all of these things in an optimized way, you are less likely to enter the valley of despair. And if you do enter the valley of despair, you're less likely to jump ship and change everything, start all over again. The way I like to look at it is, if there's 10,000 hours to achieve your goal, they say 10,000 hours to master anything. If you're spending 1,000 hours on dropshipping, 1,000 hours at uni, 1,000 hours on e-commerce, 1,000 hours on email marketing, 1,000 hours on SMMA, you haven't achieved mastery in any of them, but you've spent 5,000 hours. And if you spent 5,000 hours on one thing, you would have made a lot of progress and you would have had a lot of insights, because growth, learning is not linear. It's not just like this. Growth, when you say someone has a high IQ is something that is naturally given. But the ability to learn, being intelligent, is not a natural gift. It's something you can actually achieve. Now, when you're starting something new, when you're starting something from zero, everybody has a low rate of learning. And some people have more than others, meaning to say how quickly you can change your behavior, how quickly you can absorb information. That is element of, a bit of nature, but there's also a lot of nurture in there. Meaning to say, if you enjoy it, you will learn faster. If you get positive reinforcement, you will learn faster. If you learn, then apply and see results, you will learn faster. So there are certain things you can do to expedite your learning curve. Now, what else can you do apart from the initial stages is when you are learning and you are in immersion. You know how they say immersion therapy? For example, if you're in a situation where you need to speak in front of a crowd, and I don't even know myself. I had to speak in front of 10,000 people. On a podcast, I can, but in real life, I have to speak in front of 10,000 people. I'll probably be pretty nervous. And I remember in high school, and I spoke about this in one of the episodes, I was so shy. I was so unconfident that I could not even, you know how you go around the class and everybody has to read a page in English? And I would, everyone's reading the book. I would count how many friends or how many of my classmates are there. I'd figure out which page I am and I'd memorize it. So I would nail it. And I would even panic in them. And then also I had situations where I had to do a presentation in front of my class. I would panic. I would skip the class. I just couldn't do it. And now I can do these things. And how did I do it? Immersion and keep being involved in the thing, doing it again and again until you get clarity in it. Immersion therapy and exposure therapy helps in your learning curve. What else helps? For example, if you have the ability to learn from other people, if you can learn from your peers around you, that helps. But there's also levels to it. If you are learning from someone at the same stage as you, there is virtue in that because you have relatability and accountability. If you can learn from someone a few steps ahead of you, they can guide you and say, I just did this. Try this and that. That's what worked for me. Then you have something extra. If you can learn from someone that is exactly in the position you want to be, living the life you want to live, and has the trading competence that exactly you want, they can expedite your learning curve like no other. They can depart the knowledge and the wisdoms and the lessons without the trial, trauma, and scars that they had to endure to learn that. So therefore, if you are in one industry, one space, you can compound by peer-to-peer learning, by mentorship, and by actually masters. This is from Robert Greene's book, Mastery. If you can learn from all these three stages, you are now compounding your growth. You add in a bit of immersion therapy. You are compounding your growth. If you can now devote discipline, which you've heard every guest speak about, if you're not disciplined in life, you will not be disciplined in the market. That's what we've heard a lot of the guests say. If you've heard the guests speak about how you have to go through significant sacrifice. If you're doing that, that's definitely going to help. These generic things that we hear online, they are so true. They ring true. But the difference is when you hear it from someone that has achieved exactly what you want to achieve, as opposed to a Grant Cardone or a Tony Robbins or these guys online that are not so relatable. You hear it from a guy that is a prop firm trader just like you, who's been doing it just 5 years, but you're on year 2. So he's not that far ahead of you, but he's got the results you want. That relatability and him saying the same things is the light bulb moment. Even if it's the same information, sometimes it just hits. It's like, oh man, he's just like me. He's saying exactly what I know, but I see through it. The other thing is when you are in one industry and you keep immersing yourself, you keep learning, you keep pushing, things compound because no one has a passion for the markets. Okay, no one came into this because it was their calling in life. We all came in with the same goal, money. We all came in with the same goal, financial pursuit. But just like we start many things in life, we don't always stick to the process because of the reason we got in. Now, we could say, for example, a lot of guys get into the gym for girls. They want to look good, they want to be in shape, they just want to be attractive to the opposite gender. But then they stay because they see, oh, other men respect them more. They feel stronger. They see that they are walking into a room more respected. They feel more healthy. Like you find all these benefits. You see the weight going up. That's addictive. That's the dopamine reward system. So you started for girls, you stayed for the other things. And that's what happens to traders. I'm pretty sure you relate to where you got into trading because you wanted to make money and then you fell in love with it. You found a curiosity. You wanted to solve the puzzle. You saw that if other people are losing money, I can make money. For all the reasons you stay. And that feeling gets better and better and better the more you stay in the space. You will have highs and lows. You'll go through losing periods and winning periods. But the longer you're in one industry, the more things combine. You make more friends in the space. You learn more about the space. You start to enjoy it more because you start to build a passion. Now, what is that word passion? Passion is not God-given. Passion is not genetic. Passion comes from achievement, actually. People think passion is, I'm passionate about photography. No, you're not passionate about photography. You started to do a bit of photography and you started to get good at it, or you started to enjoy it. And therefore that enjoyment plus the ability to achievement, those two things compound into passion. So we can find a passion in anything, but you just got to be good at it and you got to start to enjoy it. And you start to enjoy it when you get good at it. So if you start to get better and better at trading, you'll start to get more and more positive feedback loops. You'll start to learn faster. You'll start to enjoy learning and you will eventually develop a passion for the markets. And I think that's how probably a lot of you guys feel. And if you have friends that are not traders and they look at you, what are you doing? You're just drawing lines on a screen. Looks boring as hell. but it's fun as hell. We know it. And I think that's coming from immersion and achievement and seeing small growth. If you can have the ability to break down the milestone, I'm talking about how to not get into the valley of despair and exit. Rather, you'll all reach the valley of despair. I had my valley of despair. But the thing is, if you stick through it, you don't jump ship and then enter in uninformed optimism in a new industry or jump to a new mentor and a new strategy. And that's another thing. People jump from mentor to mentor and they are going to do the same valley of despair loop again because they think, next holy grail. And then it's like, this holy grail doesn't work. Man, I'm back to square one. New holy grail. And you go in that same cycle. So the idea is when you are in the valley of despair, there are certain things you have to do. And the number one thing that I can say is break down the milestones for yourself so that you can hijack dopamine. As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it. And probably you'll be using it for years to come. And we've seen a lot of the guests on the show speak about they've had the hardships, where a lot of the guests have had the rags to riches story. A lot of the guests have been parents died young. We've had single mother household. We've had couldn't pay rent. So I used, we've had actually, we had another guest that had -6 in his bank accounts, now made it. All these people have come from hardship. And how have they been able to stick through it? They've been able to stick through it in the beginning through desperation. Through, I have no choice, my back's against the wall, I've got to make this work. And that's going to make you work damn hard. But that feeling doesn't stay forever. As humans, we get complacent and we start to see a bit of growth, a bit of progress, and we enter a level of comfort zone. Maybe you made $2,000, $3,000 in trading. You think you're a hot shot. You think, okay, I made a bit of money now, I got a bit of a cushion. You won't have that same desire when you have your back against the wall. So I don't think running away from problems, I've asked this question to at least 10, 15 of the traders. I always ask them, are you running away from something or are you inspired, hopeful, and want to achieve something? Is your back against the wall and you're fighting out? Are you running away from a trauma or are you chasing a goal? Are you ambitious? And most of the guests have said, I started off running away from something, but I ended up being passionate, hardworking, dedicated, character reform. And a lot of the guests have said that trading the markets is a great way to improve as a person. Not only the skill of being good at technicals and good at trading, but it's a way of life. I've heard that a lot. It's a way of life. It's a way of being. You personify attributes that you have in the market. The market amplifies what you are as a person, and then you start to address it. So you can actually change as a person a lot. So it starts to be, I get inspired. I become ambitious. I want to achieve more. I want to get better at this. And it starts to be a goal-orientated thing. It starts as a desperate thing and becomes goal-orientated. So that transition, you got to know where you are, but you will all transition, I think. When you're in that transitionary period, you have to break down dopamine. You have to break down the milestones, because if you are now only going to see yourself as successful and have that high, have that dopamine at the end goal, you will give up in that space in the middle, which could be years. So what you need to do is break down the milestones. You need to break down and say, I'm not going to feel like I'm a success and I can tell my friends and family and be proud of myself when I'm funded, when I made $100,000 and, and I've quit my job, because you're going to give up before then. The likelihood is you're going to give up unless you have a strong reason why that you're running away from, a strong reason why you've got kids to take care of, your parents have died, some big trauma. But for most people, whatever trauma you may have, unless it's massive, it won't last. I've had traumas in my life, but nothing massive enough that's put me to the ground that I've had to have my back against the wall. And, I've not had that. I've had down periods. I've had moments of maybe depression. I've had periods of stress and tough periods, but nothing where I could say like, oh, I lost both my parents young and I was in debt and I had to take care of my siblings. That would be a huge why. My situation, and probably most of you, are somewhere in the middle. So what do you have to do? You have to break down and say, I I can't have my dopamine based on things that are out of my control. Is you being funded in your control? Oh, yes, technically, but there's a lot of outside elements there. So you can't say when I'm funded, I'll be happy. You can't say when I made $100,000, I'll be happy, because there's too many things, variables along the way. But if you can feel like a success, if you can feel like you've achieved something with something that's in your control, and you get the same dopamine high. By the way, your brain doesn't know the difference. When the dopamine neurochemical rushes through your body, whether that's through you've achieved graduation, you've passed through years and years of university, you've worked hard and sacrificed, and all the tough moments have been worth it, and you're there in front of your parents and they're proud of you, that dopamine high, the neurochemical is the same. The feeling is the same. You might feel different, but your brain doesn't know the difference. Now, you hit a PR in the gym. That's not as hard as going through the university. Maybe you just added 5 kilos to your bench. You'll have a huge dopamine high. You might feel like a great success. Or if you play a video game and you I don't know, in Fortnite, you get the victory thing, whatever it's called, when you're number 1 out of 100, you'll have a dopamine high. And obviously, you know, deep down, that's not as a great as an achievement as going through all of university and passing with great grades. But your brain won't feel the difference. So hijack that. Hijack it in a sense of, I know I can backtest 3 months of Euro USD. Put that as a goal every week. I know I can journal every single one of my trades, win or loss, for a month. That's in my control. I know I can take a funded trial account and I can go for 10% gain. And if I do that 3 times in a row, then I can reward myself by actually paying for a challenge. What have you done now? You've done the process of going for an evaluation, which is normally a stressful, tough exam period, kind of like, is this going to work out? And it comes in with stress. Now you've hijacked it to an achievement. Now you've thought, I've earned the right to do it. You are now coming in more confident. You're coming in with proof. Confidence is proof. A stack of evidence to say, I've passed 3 trials, so I now deserve the right to take this. You feel ready, you feel deserving, you feel confident, you feel more prepared, and you've practiced. So this is a way better way to do it. And you've got dopamine on your side. You've got motivation on your side. You're in a more positive mindset. You've now hijacked dopamine. You've now hijacked motivation. You've now hijacked your mindset approach, which is something I don't think people consider. If you can put all the milestones, instead of being right at the end, but along the way, on every logical milestone, I want to get funded, break that down. I want to pass phase 1, break that down. I want to take 1 profitable trade, break that down. I want to follow my prime setup checklist, break that down. I need to study each one of my prime setup checklist confluences and find data for it. Break that down. Each one of my confluences, I'm going to find 100 examples of. Break that down. Each one of the confluences that I'm breaking down into 100, I need to find which variants were a bit off, that were invalidated. If you can break it down as much as possible, just like the market is fractal, fractalize your process, and then each one, you will find all of these things. Upon achieving each one of these sub-goals, you'll get motivation. You'll get dopamine. Boom. Achievement, confidence, dopamine, further motivation, positive feedback loop. 1 win. What else do you get? You now get immersion therapy. When you're getting immersed into something, you start to achieve more, you start to see it more, you start to enjoy it more. Another win, boom. Now, when you are seeing more, achieving more, building confidence, what are you doing? You're starting to get the positive feedback loop of, this is actually quite fun. This is actually quite good. I'm getting good at this. I'm learning. And when that happens of I'm getting good, I am learning, that's the starting embers of the burning fire of a passion. And if we could start to do that, but not get passionate through the money, not get passionate through the end goal. We get passionate through the process, because passion, again, is not God-given. Passion is something we can hijack and create. Just like you find people that are passionate about all the weirdest things in the world. They were not born to do that. They became passionate. They became passionate because they got good at it, because they started to form a sense of mastery, and they put it as their self-identity. And if you can do that along the process, not the outcome, along your controllables, along the things you know you can do, it's on you. Can you wake up and backtest? Yes or no? That's in your control. Whether you get funded or not, that's a little bit out of your control in the beginning. Now you've started to add into the fractalized process, dopamine, motivation, confidence, passion, adherence, positive feedback loop. You've added all of these great things. So now when it comes to the hardships of sacrifice and consistency, dedication, all of these things you hear, these things all become a lot easier when you have this in your back pocket. Confidence, passion, enjoyment, pleasure, dopamine. These things will fuel that. because everyone can be disciplined, consistent, and make sacrifices. But some people take bigger sacrifices and don't feel it. Why is that? It's either because they have something to run away from, a big why, or they're a little bit more consistent and adhering to the process, or they're more goal orientated. You can hijack that if you don't know how to. And whenever you enter the valley of despair, you can deploy all of these things and arm yourself with it. Because the goal of trading is to stay in the game long enough so you don't die. Meaning you don't go through enough scams that you give up. You don't lose all of your deposable capital, your savings, into bad mentorships, bad bots, bad signal services, and failed platform accounts, because then you'll give up. You don't want to be in the market and taking consistent losses and losses and losses until you're burnt into the ground and you give up, when that could have been avoided if you just followed a plan. If you can stay in the game long enough and not die by following correct mindset approaches and then also physical approaches, which I'll speak on next. But every single trader, to wrap up the first point, every single trader that I've seen as successful, none of them has been doing this for a year. None of them has been doing this for 2 years. Every single one of the guests that I've had on the show that have achieved something with proof have been doing this between 5 and 10 years. And they've been doing it full time for at least 3 to 7 years. Meaning they have no other thing going on in their life. Trading is their everything. That's not a coincidence. That's a byproduct of their process to achieve what they achieved. So you got to then realize, I can't just say I'm going to be successful in a year. Maybe there's a random guy that did it. And you can also question, is it legit? Is it longevity in it? But the people that we see in front of us that are doing this properly for life, that are in the position I wanted to be in when I started, they had time on their side. They all did the other things, sacrifice, dedication, motivation, all these things. But time was number one. So how can you stay in the game long enough? Because if you can make it to the 5-year mark and follow sensible approaches, the likelihood of you making a withdrawal is so high. I think the likelihood of you making a withdrawal within 6 months or 1 year is pretty low. And we all like to think we're special. We all like to think we're different. But the statistics say that I'm not special, you're not special, no one's special. We're all going to fail in the first 6 months or 1 year. But the amount of people that I know that are at the 5-year mark, but truly at the 5-year mark, not 5 years of fumbling it and giving up for 6 months and half-assing it. No, 5 years doing it properly. Every single person that I've met that have been doing it 5 years properly have made at least 10K in the markets, at least 10K. A lot of them a lot more. Meaning to say, time is always going to be your friend. Just don't give up and don't burn yourself. What else can we do? Apart from mindset approaches, which I've spoken about, it's also your physical process. What is your step-by-step? Meaning to say, it's not just about work hard, be dedicated, be consistent, and put it all on yourself, because you need a helping hand. This is not a game of talent. There's no talent in the markets. This is not like you're naturally gifted genetically to be a marathon runner. No, this is all nurture. This is no nature. There's no nature in the markets. It's all nurture. And if you are trying to nurture yourself to the best version as a trader, you are better off doing it with help. So the process you want to follow is, I can achieve this much in 5 years and another guy can achieve this much in 5 years. And he worked just as hard as me. He sacrificed just as much as me. He put the same hours as me. So it's that case of work smarter, not harder. What is that equivalent in the Forex space that goes in tandem with not giving up and time on your side? Well, it would be how to not have incremental growth, how to not grow step by step in a very staircase fashion. Because you can, but it's going to take you a long time. And just like in snakes and ladders, you climb the steps of the ladder and then you hit a snake and you go tumbling down. And that can be a moment where you give up. That tumbling down mean you were funded, you lost your funded account. You just blew your last bit of money on funded challenges. You just faced a scam with a bot. These things are the snakes that are going to make you come down, and that all that little progress you made can come crashing down, seemingly in our mind. Obviously, don't unlearn the lessons you had, but adherence. What we need to do is have a correct approach. And I think mentorships is a given. We can do it alone. I'm confident that some of you could do the whole process by yourself, just by consuming good content online, applying yourself and true immersion into the markets. If you just look at Euro USD every single day for a year, every single London session, you watch price action every single day for a year, I guarantee you'll be a better trader. No one's doing that though. No one's doing that. And I think that would probably, once you have a core level, watching Euro USD every single day for a year is better than any mentorship, is better than any course, any program. If you can intentionally watch price action in a curious and observant manner, you will learn so much subconsciously and actively. And I'll tell you, anecdotally from myself, I've learned more in the last year and a half than I have in the previous 7 before that. And that 1 year and a half, the last year and a half, I haven't paid for any Forex mentorships. I haven't got any gurus around me that I'm learning from technical analysis. Beforehand, I did in my earlier days, but all of those things compounded that I've mentioned previously, immersion therapy, passion, curiosity, wisdoms now to know exactly what to look for, application, data-driven, testing approaches. When you have all of this on, as your journey progresses, you get better at noticing things. You get better at picking things up. You get better at testing things. You get better at applying things. But there's no better mentor than the market. But I like to look at it like this. They say the best way to learn language is go to the country and talk to the people, because you're not going to learn a language in the books. You're not going to learn the language fluently in a classroom. You're going to learn it by having conversations, immersing yourself in a country's culture, learning the slang, learning the abbreviations, learning the phrases, learning the accents, learning the style of talking, and practicing through different dynamics, different people. That's the best way to learn a language. Okay. If I fly to Japan right now and I throw myself into the culture, I'm going to sink because I don't know any Japanese. Okay. So meaning to say immersion definitely is the best way to learn, but it's the best way to learn later on. You got to have a base. If I now spent the first year learning vocabulary, learning basic grammar, learning tenses, and I could have a very basic dialogue, I could hold myself in a very broken conversation, and then I flew to Japan, then my language would fly, because through immersion, just in 3 months, I'd learned so much more than I did in the whole year of being in the textbooks. So you got to have that base level to capitalize on the immersion. You got to do the same in the market. If you want to capitalize on watching Euro USD every day, you got to know what to look for. And because there's no nature in this, there's no IQ in this, there's no God-given talent in this. We don't know what we don't know in the markets. So you got to get to know what you're missing. You got to get to know what are the things to look for. So you got to have stage 1 first before I would say immersion. Immersion is definitely the most important thing, and it's going to be the 80-20, but you got to do the base first. That base is you got to know primary drivers. I've spoke about this so many times. You can't approach the market from confluences and approaches and strategies that are just statistical edges, that are probabilistic. I know it sounds good. It's a data-driven statistical edge, a Fibonacci. Makes sense. I use Fibonacci's and trend lines and EMAs, all these things back in my first few years. For most people, they don't work. And for those of them that it does work for, it's because they've gone through the 8 years, they've gone through the immersion and passion and all of the things that I've spoken about. And because they've not grown linearly, they've grown exponentially, they've found nuances that are not prevalent or obvious to the newcomer. And I guarantee those people, if they pivoted their approach with their level of experience and expertise that make Fibonacci, EMAs, and trend lines profitable, if they started to shift to primary drivers, taking all the knowledge they have and then shifting it to primary drivers and immerse themselves in that, I guarantee they'll be a better trader too. So it's not about who's better or who's worse at a strategy. I'm just saying it makes no sense to approach the markets trying to run a marathon uphill. And I think learning price action, learning how to trade whilst running a marathon uphill makes no sense. I'd rather run downhill with a breeze behind me with soft, springy shoes so I don't hurt my knees. These analogies today, huh? What is that equivalent? If I'm coming to the market and I'm trying to learn and I'm trying to master trading, only looking at the higher time frame, only looking at indicators, only looking at support and resistance, and only looking at trend lines and Fibonacci, all of these things are the first things we learn. Baby pips, YouTube videos, the intro basic course, the more famous courses actually, the big follower people courses, they're usually the very basic crappy courses that just surface level. if you're going to have a full endeavor on that, you're going to really struggle, I think. I don't think there's too many people that really make it from that perspective. And actually, all of the traders I've spoken to that are profitable, none of them ascribe to that process after 5 years or 10 years. They have their unique twists, they have their refinements, but I don't see any of their base being just that alone. I see them maybe using support and resistance, maybe using trend lines, maybe some of them, I don't know, maybe some of them using Fibonacci, but they don't rely on it. That's not their main approach. You might have a guy that's using a higher time frame, but he's using a lot of fundamentals as well to compensate for how not as reliable a support and resistance level is. It's support and resistance plus other things. It's a trend line in Fibonacci plus other things. That plus other things, what are they? The common denominator between all the guests and myself has been looking beyond the norm of refinements in the market. And a common denominator between most has been primary drivers. And something I've spoken about. You got to look at the market from causation, not correlation. Causation in the market is what causes the market to move. Direct cause and effect. Correlation is coincidence. Correlation, the example I've given before on the show is, on a summer's day on the beach, you will have ice cream sales go up because it's nice weather, people are out, families and kids are out, and people are buying more ice creams. Also, on a nice summer's day on the beach, a lot of people are doing water sports, surfing, jet skiing, all these kind of things. So therefore, water sports accidents increase. You have two things going up. They are correlating. Ice cream sales have gone up, water sport accidents have gone up. They didn't cause each other. Eating ice creams and more ice creams didn't cause jet ski accidents. You see where I'm going with this? I don't believe the market reverses because of an EMA. I don't believe the market reverses because of a head and shoulder pattern. I don't believe the market reverses because of a support level. Go right now on TradingView, go on any time frame, get the horizontal tool and just press it anywhere you want, just press it. And then look left. You'll find that random line you drew tap perfectly into a wick and show it as a resistance level. That's the random nature of the market. Because of randomness, this is also a scientific thing. Randomness, this is why you have to have statistically significant in a scientific experiment. You have I forgot the number right now, but when you go through the data, when you go through the results, in a conclusion of any scientific paper, you go to the bottom in the conclusion, they'll tell you the statistical relevance of their data. And if it's above a certain number, I forget now, it's from my uni days. If it's above a certain number, it's to negate the fact that this was not correlation or just law of randomness coming in, but it was actually something to pay attention to. You got to have the same in the market where just through randomness, you will find... You will find, I don't know why this came to mind, I don't know why I'm saying it. I saw a meme on Twitter the other day and it was called the balls and dick pattern. It was a pattern on the charts that was like, it looks like a ball, then the dick, and then another ball, and then something else happened. And then they were doing these random things. There was another one where it was like the dragon pattern. And it was like, look, if you follow the dragon pattern and the dick pattern, excuse my language, this is a profitable strategy. If that doesn't prove the law of randomness, I don't know what will. Support and resistance will show validity if you just look for it. Trend lines will show validity if you look for it. Fibonacci will look validity if you look for it. Everything will have validity if you look for that with that lens. That's called a confirmational bias, okay? If I look at the world with my eyes, I will see everything. If I wear blue glasses, I will see everything as blue and shades of blue. If I wear red glasses, I'll see everything as shades of red. But notice the difference here. My trousers right now are blue. If I put red glasses on, they are going to look reddy blue, kind of purple. I'm going to have undertones. But if I look at it with my blue glasses, I'm going to say, oh, that's blue. If I look at it with no glasses, oh, it's blue. Meaning the lens you look at things gives you the confirmational bias. So instead of looking at things from correlation, based on what your mentors have told you, based on the surface level things, look at primary drivers which are causative. Those causative things are going to be what causes the market to move. Primary drivers, and to list a few, it's going to be supply and demand, premium and discount, daily cycle, time-based manipulation, volatility, liquidity. And then on top of that, you got to build proof of entry concepts like displacement, entry models. Imbalance, I think, is a good one. Inefficiency are a good one. I'll speak about it at length another time from a technical approach. But the point being, you want to get into primary drivers that are causative, not secondary factors that are correlated. Because every correlated factor works on a specific sample size if you cherry pick. But a long-term sample size, causative factors always win. And that's the approach you got to take. I want to wrap up here. There's a lot of things still on my mind, but I want to wrap up here. And I want to wrap up with a lasting thought. In trading, we come in with a lot of emotions. We come in with hope, desire, greed, fear, desperation. It's a very emotionally charged endeavor. And through going through the terrains of the industry, through the highs and the lows, through the stressful periods and the despair, and the highs and the wins and the withdrawals, everything is amplified. Those emotions you came in with are all amplified. And amplified emotions leads to deviations. Deviations that will lead you into giving up and negativity and spiraling in the valley of despair. And of course, we can talk about psychology and motivation and the plan and the mentorships and the approach and all of these things, yes. But my favorite saying, as you know, I have many mantras that I repeat to myself whenever I do anything. In every situation, I have a mantra for. And you know my favorite one. And I think it's the most applicable one for in the markets and in the Forex or trading space as a journey and within actually taking trades. When you are not outcome driven, you are process driven. You will always be better. And in that process driven approach, if you can be refined, restricted, intentional, you'll always have better outcomes. Meaning to say, a restricted trader is a profitable trader.